Hello and welcome to this week's market update. There's a lot happening in the financial world right now, so let's dive in and go over some of the key events and trends. Starting with the economy, there were some notable developments on the inflation front. In the U.S., the Producer Price Index rose 0.5% in September, showing that inflation is still elevated at the wholesale level. The Consumer Price Index also edged up 0.4%, with the main drivers being higher shelter and gas costs. Core CPI, which excludes food and energy, was up 0.3%. At the Fed's September meeting, officials indicated inflation has moderated from peak levels, but they need more evidence it is declining towards their 2% target. Overall, the data confirms that inflation remains sticky and the Fed is likely to maintain a restrictive policy for now. Shifting to stock market performance, it was a mixed week on Wall Street. The Dow and S&P 500 posted modest gains, while the tech-heavy Nasdaq declined slightly. Defense and financial stocks were among the outperformers, with Northrop Grumman, Leonardo DRS, and major banks like J.P. Morgan, Wells Fargo and Citi seeing nice bumps. Airlines pulled back amid suspended flights to Israel during conflict there. Stocks saw increased volatility as Treasury yields whipsawed after the hotter-than-expected inflation data. The U.S. Market Insight. In the United States, the economic recovery after the pandemic has been uncertain. Initial predictions of a modest 0.4% growth by the Federal Reserve for 2023 have been raised to 2.1% in September, with some more optimistic estimates of 4.5% growth in Q3. However, there are signs of concern as full-time job losses persist and gig workers increase. Retail sales have started to decline, and industrial output is expected to dip slightly. The housing market is experiencing a fall in existing home sales, but housing starts are showing signs of bouncing back. Leading economic indicators have remained stagnant, and regional surveys are showing mixed results. Meanwhile, the dollar index has fluctuated, reaching a retracement objective, but breaking below a certain level could signal a potential economic downturn. In summary, the U.S. economic recovery has shown some positive growth, but there are lingering concerns about job market dynamics, declining retail sales, and a potentially unstable housing market. Leading economic indicators and regional surveys indicate an uncertain economic path ahead. The performance of the dollar index adds an additional layer of complexity with potential implications for the broader economy. These factors collectively underscore the ongoing economic uncertainties in the United States, suggesting that the road to full recovery remains uncertain. The Eurozone market outlook. In the Eurozone, recent economic indicators reveal mixed trends. Notably, the Eurozone trade balance historically weakens in August but improves in September. In July, the trade surplus reached €6.5 billion, marking a substantial shift from a €36.3 billion deficit in July 2022. However, the German goods balance narrowed for the second consecutive month, standing at €14.4 billion in August. France reported a slightly widened trade deficit of €8.2 billion in August compared to €8.1 billion, indicating some trade imbalances within the Eurozone. Moreover, the broader measure of the current account has been normalizing, but it has yet to reach pre-pandemic levels. The euro's performance has been marked by fluctuations. It retraced a significant portion of its recent gains following US CPI data and posted a bearish outside-down day. If the euro breaks convincingly below the $1.05 threshold, it could indicate a further decline to the $1.045 level and possibly $1.04. However, should $1.05 hold, the euro would need to regain the $1.06 area to signal a renewed uptrend toward $1.07. These economic indicators and currency movements reflect the complex economic landscape in the Eurozone, characterized by trade fluctuations and currency dynamics. Overview of the UK economy. In the United Kingdom, the likelihood of a Bank of England interest rate hike in November remains uncertain, with the swaps market pricing in a 1 in 4 chance of an increase. Key economic data in the upcoming days will play a pivotal role in shaping expectations. Employment figures, set to be released on October 17, are particularly crucial, especially the wage component. Recent data revealed a significant drop in employment in July, the largest decline since October 2020. Additionally, the September Consumer Price Index (CPI) report on the following day holds importance, and a 0.3% month-over-month increase could potentially lower the year-over-year inflation rate to 6.5% from 6.7%, marking the slowest pace since February 2022. A subsequent report on retail sales on October 20 will provide insights into consumer strength. Sterling's performance is closely tied to these developments, with resistance near $1.22 and intermittent support near $1.21. Looking ahead to next week, there are some key events on the calendar. On Tuesday, major companies like Johnson & Johnson, Goldman Sachs, Netflix and Tesla will be reporting earnings. Tesla's call on Wednesday will be especially closely watched. Investors will also be tuning into speeches by Fed officials, including Chairman Powell on Thursday for any signals on the interest rate outlook. On the data front, September retail sales will provide insight into the consumer economy. And in Europe, the ECB rate decision on Thursday will be a focal point, with expectations they will hike by 75 basis points. Asia Market Insight. In Asia, China's Q3 GDP numbers on Monday will draw attention as markets look for signs of improvement after a weak first half. Any new supportive policy measures could also emerge. It's shaping up to be an eventful week. Earnings season is kicking into high gear, central banks are firmly in focus, and geopolitical tensions remain elevated. There are still many uncertainties, but we'll be here to break down the key developments as they unfold. That wraps up our overview of the major financial events and market outlook. Don't forget to subscribe to our channel and give this video a thumbs up if you found it valuable. Doing so lets you stay updated with our latest insights and strategies. Thank you for watching.